走进纽交所，直击华尔街。美东时间11月1日，美国联邦储备委员会结束了为期2天的货币政策会议，宣布将联邦基金利率目标区间维持在5.25%到5.5%区间不变。该决定符合市场的普遍预期。近期10年期美国国债收益率升破了5%的关口，创下16年以来的新高。本次美联储会议声明中特别指出，美债收益率攀升带来的金融环境收紧，可能对美国经济和通胀有所影响。美联储公布了暂不加息的决议之后，美股3大主要股指全天维持涨势。另一方面，美国国债收益率则集体回落。在个股方面，苹果公司于周四公布了新一季度企业财报，第4财季营收略高于市场的预期。iPhone 15的销量要强于去年同期 iPhone 14的销量，但 iPhone 以外的所有硬件业务均同比下降，其中 iPad 和 MacBook 业务大幅下滑。苹果的财报公布之后，第4季度股价将受到什么样的影响？美债收益率回落，美股3大主要股指走高，这样的趋势是否会延续下去？连续暂停2次加息之后，美联储12月份的货币政策又将走向何方？纽约时间11月3日，直击华尔街栏目邀请到纽交所资深交易员 Peter Tuchman 来点评本周美联储货币政策的决议，以及谈一谈对于焦点个股的分析。Hello, Peter.
Hi, how are you?
Good. Thank you so much for joining us
My
again
pleasure.
today. Okay, the first question is about Federal Reserve's monetary policy because they just announced to hold interest rate unchanged in a target range of 5.25% to 5.5%, where it has been since July. So, what signal has this sent to the market?
Well, first of all, I think the reason that they put a pause on raising the interest rates further is the fact that inflation itself has sort of stopped escalating, and there's a bit of a cap on it. So that's a good thing, that the work that they've done, the aggressive interest rate raises that we've had over the last 18 months and more have been working. Okay, their goal is 2%, and I believe that they will reach that, but it's not going to happen in an immediate way. You asked me what is the message they're sending. The message is that that inflation has stopped getting worse. It's started to get better, and they're confident that the tools that they've instigated beyond raising interest rates and whatnot have been working, and so they're looking forward to curbing inflation.
So where do you think we are right now in the interest rate cycle? Are we approaching the end of interest rate hike? And when do you expect they will start cutting interest rate?
Well, it's a good question. Now, look, I cannot predict what they are doing. If we've learned anything, the Federal Reserve is capable of changing their mind like that. If we get 1 or 2 bad reports, whether it's the labor force or whether it's CPI and PPI and ISM and all the other amazing economic data that comes out on a weekly, bi-weekly, monthly basis, I think it's important to note that for now, they've decided to halt the raise. I don't think, look, it's a really hard question to answer because I think, where are we in the cycle? We are clearly on the back end of the cycle. We've gone from 75 basis point aggressive moves over the last number of months to 50 to 25, and now we've had a couple of cycles where we actually have stopped. Obviously, they want to get a sense of whether they need to be more aggressive. I think the most important thing that we learned from Jay Powell's conference on Wednesday was that in the past we got the sense that if we did not get a further reaction by inflation over the next couple of months, that he would continue to raise it. He gave us the feeling in the news conference that he's going to be patient, right? That we may wait 4 to 6 months to see whether it's living itself out in the inflation cycle before they're going to continue to raise the rates.
So following the Federal Reserve's decision of a rate pause, treasury yields continue to decline. At the same time, stock markets seem to rally a little bit, right? So do you think this trend will continue into the last quarter of 2023?
So let's talk about 2023. First 7 months of it, we had a spectacular rally coming off of a really difficult year of 2022, right? Double-digit losses, okay, in 2022 due to the aggressive interest rate raises. Then we had 2023. The first half almost into the third quarter of 2023, we saw the market do incredibly well. The tech sector was coming off the bottom. It rallied quite well. We've seen stocks like NVIDIA and a number of the other names act quite well, okay? So look, so after a 7-month rally, we did see the market, which was a quite fast and furious rally, an aggressive rally of 2023, and the market did quite well. We did start to see the market come up against some resistance, and so we ended up seeing 2 or 3 months of the market sell off. So your question is, look, we are here in November 1st, and is Santa Claus going to come to town? How is the market going to respond to the next couple of months? What we saw was one of the biggest contributing factors to the sell-off that we've seen over the last couple of months was obviously the bond market and the treasuries, right? We saw record highs, right? Obviously, historically, when you've got yields going up, it's got an inverse relationship to the marketplace. Doesn't always happen. We've seen it happen in different ways, but obviously, I think that aggressive move in the yields obviously has affected the sell-off that we've had over the last number of months. But, it's amazing. This market, the moves that this market makes are so aggressive, right? The sell-off that we saw for the last couple of months relative to the yield completely changed over the last 5 days. We have now had 5 days of market up triple digits every single day, up 600, up 500, up 400. So what's curious about this market is it's very hard to have an opinion on whether the market's going to keep going up or it's going down, because because the market's reaction is so aggressive that anything can happen.
So according to the latest survey from American Association of Individual Investors, pessimism actually is among individual investors about the short-term outlook for stock market. So why do you think individual investors are more pessimistic about the short outlook for stock market?
Okay, well, look, I think 2023 has not been an easy year for the stock market. Yes, we did have 7 months of a nice rally, but it was very sector sensitive, right? Tech sector was the most aggressive leader during the year, and a lot of the other stocks did not. And then you had 3 months of, since July, August, September, October, we've seen 3 or 4 months with quite a large sell-off. So, I mean, it's, these polls that they take and the consensus that they take, I mean, do I really believe it? I not necessarily trust it. I think people are questioning the continuation of the rally that we saw in the beginning of the year. Coming into the end of the year, is Santa Claus going to come to town? I think economically, sometimes the market itself and the economy don't always go together, right? Often we'll see the market rally. Look, you have to realize who's invested in the market. Mostly the market is the 1%, right? A lot of the general population in our economy are not invested in the stock market. Many people have not gone back to work. Many people are still struggling, still coming off of COVID, coming off of 2022. So I would think if that is in fact true, that the consensus is one of pessimism, it does make sense, because just because the market's coming off the lows of 2022 does not mean that the general population is doing better. I think people are struggling. We still do have an inflationary cycle going on. People's costs, whether it's, paying back student loans or buying eggs or buying gasoline, the general population is still struggling. The cost of everything is definitely higher than it was 4 or 5 years ago. So then if you were to ask the general person, are you struggling? Are you pessimistic about it? Then the answer is probably yes.
But actually, according to the U.S. labor market's newly released data, the U.S. worker productivity grew at its quickest pace in the third quarter for the 3 years.
Okay, well, look, I like that little bit of information. So for me, that's very meaningful. So let's talk about it. Let's talk about the fact coming out of COVID, so many people left their jobs. And then the whole work cycle, people wanted to work at home, the stay at home, and people didn't want to go back to work. Then we saw with the raising interest rates and the sell-off in the tech sector, we started to see across the board major layoffs within the tech sector. Okay, so I would think finally coming into the end of 2023, people are probably desperate to get back to work. They're desperate to be productive once again. they're desperate to start making money and to put money to start growing their disposable income, to start paying off some of their bills, their student loans, and or their credit cards. So I would think it's been a while. I look at this cycle over the last 4 or 5 years as the world post-COVID. And eventually people are going to want to be productive again. Mm-hmm. And if that's the information that you're getting from that consensus, I think it's important and I think it's good.
Mm-hmm. Our last question is also about Apple, technology giant Apple, because they released their financial earnings on Thursday after market.
Right.
What key points or takeaways that investors should pay attention to?
Okay, so the earnings report was mixed, right? We did see a better than expected earnings relative to the iPad, to the iPhone. Right, but we did see a breakdown, which I had never actually seen before. I'm sure they do it, but I had not noticed it because I was trying to analyze the earnings yesterday, and they were very clear about the fact that the iPhone did better, but the iPad, and the MacBook did not do as well.
Right.
So look, Apple is one of the greatest companies of all time, obviously. Are they struggling? Do they, it's very hard to keep up with the amazing performance they've had year after year, quarter over quarter, year over year. So you know what, at the end of the day, we did see the stock rally after the initial release of the earnings, and then it sold off significantly. I mean, significantly. It sold off, a couple of percent, I think, since then. You know what? Look, Apple will always find its footing, right? It's got one of the greatest products out there in the marketplace. It's hard for me to overanalyze what the future looks like for Apple. It will always be here. They have great products, so I think they'll find their way.
Okay, thank you so much.
My pleasure.